Manx Financial Group, or MFG, has subsidiaries offering a suite of financial services to retail and commercial customers in the Isle of Man and the UK. I'm delighted to be joined by the Chief Executive, Douglas Grant. So, Douglas, before we talk about the company, I think it's worth reminding the audience about the uniqueness of the Isle of Man. It's neither part of the UK or the EU.
It has its own language, it has its own parliament. The parliament's older than the UK parliament. It raises its own taxes, it passes its own laws, but it's part of the UK for defence, etc. But over the years, there's certainly been a real harmonisation of the legal and financial positions to the UK, which is, I mean, it's exactly what you'd expect. The UK is the Isle of Man's biggest partner, so it's never going to deviate far from its biggest market. So that harmonisation was always going to happen. And it allows a lot of people, such as myself, families, companies, to come and go between the Isle of Man and the UK, wherever the work actually is. I mean, there's no advantage, for example, in a UK tax resident putting a deposit in an Isle of Man bank. There's total transparency between the Isle of Man and the UK, and the only reason you do it, I suppose, would be if the rate was any better over here than it was in the UK. But when you consider the amount of competition in the UK market, I don't think that would actually be the case.
Okay, so I understand the harmonisation and the symbiosis between the island and the UK. So what does the company comprise of, and who are its customers?
Yeah, we've got a really simple operating model. I mean, Conister Bank has a Class 1 deposit taking licence on the Isle of Man. So that's the same deposit taking licence or banking licence, as it's called, as HSBC, Barclays, NatWest, etc. So the business model has always been you raise deposits, retail deposits tend to be fixed term deposits, fixed rate as well. So you raise deposits on the Isle of Man and you lend them in the Isle of Man. But as you can imagine, 86,000 people on the Isle of Man only need so much credit. The opportunity is always going to be in the UK, where you've got 65, 66 million. So we raise deposits on the Isle of Man, lend what we can on the island, but most of our lending, in fact, 78% of lending is actually done in the UK to the SME market. So, and if I bore you, just please tell me to stop, Sarah. But what that means is you've got an Isle of Man banking institution with this really transparent operating model, but putting its money, lending its money in the UK. But we have no brand in the UK, so if we were to create a brand to compete with any of the challenger banks, then that would cost me tens of millions of pounds. So the better way for me to do that is to go through a distribution market. And in the UK, depending on how you pick the market size, there's between 2,500 and 3,500 non-bank lenders. And it's an amazing number. So all these non-bank lenders need to get their liquidity from somewhere. So we would use our liquidity into them. They fund the ultimate customer, and that works for us. But it also lets you see why we were so keen to get a UK banking license, so that we could start kind of raising UK deposits, spending them in the UK, Isle of Man deposits, Isle of Man, and start creating some form of jurisdictional equivalence. Although we'll never get a pound in Isle of Man, we'll only be putting the UK, we'll be putting the Isle of Man, but we'll get somewhere better than 100% and zero, which is where we currently stand.
And I think it's worth reminding potential investors that you, in fact, only got the authority to accept deposits in the UK in October. So just a month ago, were there regulatory hurdles to overcome? Was that tough to get that license?
To put it into perspective, the PRA issue less than 3 licenses on average annually. And there's well documented banks far bigger than us who have spent 3 and 4 years and haven't got a license. There's other banks which have had to withdraw their application. We already had a banking license in the UK, so we knew we were starting from a strong position. But to actually have the suppose it's a validation, to actually have the PRA and the FCA approve your business model, approve you for taking deposits, actually gives you comfort that you've actually got a model which is based on sound economics. So it wasn't particularly difficult. It was onerous in terms of manpower and management time, but it wasn't overly difficult for us to achieve it. I had great support from my board, and also my executive team were really committed to achieving that goal for us.
So you mentioned economics. There's something that's impacting consumers and banks alike. Our interest rates currently at a 15-year high. How is that impacting the group's margins?
we made a decision early on. Obviously, we didn't know it was going to be 14 rate hikes in a row, but we made a decision early on that we'd pass the interest rate increase on to the deposit customer. Because if you think about it, your deposit customer has been earning next to zero since 2008. So we decided to pass that on, and that meant we'd have a contraction in our margin. But that's fine. It was part of that decision. We've tried to increase rates where the market would allow us to increase rates, but we're so small. I mean, a balance sheet of £500 million, it's not even 0.4 of a billion. You're not influencing the market, you're a follower rather than a leader. So you've got to trade on the customer experience, it could be on technology, it could be on pure relationships. So you never want to trade on price anyway. So the truth is, we had a contraction in our margin in the first half of the year, and we'll see that going through the second half of the year as well. And I would imagine H1 next year will be even tougher for the individuals. But what we're now seeing, if you look at the Q3 results of the clearing banks, they've all had contraction of margins coming through. So they were slow in passing the benefit on to the deposit customer, but that was also noted by the FCA PRA, because they actually said, we'll be having a look at this. And the example they used was, you weren't slow in increasing your mortgage rates when the interest rates went up, but you've been a lot slow in increasing your deposit rates. So I think if you want to be in the sectors for the long term, and you want to have a reputation which is positive, then I think you've got to treat customers fairly and actually pass these increases on as and when they come due.
So bearing in mind you only got the UK license for Conister Bank in October, we obviously can't factor them in to the most recent numbers, but what were the most recent numbers like from the group?
Well, the half year numbers were really positive. We advanced 182.6 million, which was 2/3 of 65% more than the same period last year. So despite the difficult market and the cost of living market, we were still operating in sectors which we only operate in sectors which are proven to be resilient to both COVID and recessions. And we made a conscious effort back in Q4 2019 to move our portfolio into those sectors, because what we could see was that with Boris Johnson being elected as Prime Minister, Brexit was definitely going to happen. And all we could foresee was a recession. So luck played its part as well, because COVID obviously happened in February, March 2020, but we'd already moved our lending into those safer sectors. So we're now getting the rewards for that. So our loan book in the half year grew by 40%. Balance sheet grew by 1/3, which is great. Profit before tax was a record for the half year at £3 million. That was up 29%. And the return on equity was 17.1%. So with a really good first half, despite a fair number of economic headwinds, which, to be fair, it wasn't just us that was facing them. The whole world, whether it was, well, the whole of the UK was certainly facing them as well, whether it was the war in Ukraine, whether it was a cost of living crisis, whether it was fuel costs, or whether it was rampant inflation.
What would happen to your group if there was a political regime change from Conservatives to a Labour administration? Have you started factoring that in?
Well, we are looking at that because, as you correctly state, that is a very likely outcome if we were to put scenarios through to whenever the election is. It's due before, is it January, February 2025? So our view is that Labour at this point in time are still saying they're going to be friendly to finance sector, and the lobbying that our associations, such as Finance and Lease Association, are doing would actually prove that to be the case. We don't think they've got much wriggle room to change much. And in the UK, we're almost exclusively financing SMEs. And I think SMEs, I mean, it's a well quoted a bit lifeblood of the UK, whatever, but I suspect there'll be a heck of a lot of SMEs are Labour supporters. So I don't believe there'll be much change. Corporation tax, there has to be, I'm not sure about this last budget as to was it laden with sweeteners for the election? Is it going to be sooner than other people think? But I just think the tax regime's not going to change much, whether it's Labour or Conservatives within power in a year and a half's time.
So do you anticipate a change in your dividend policy? How likely is it that you'll be paying dividends in perpetuity?
Well, you can't promise that, but our commitment is 10%, and it's in the scrip dividends, so some taking cash, some taking shares. And we are pleased to return to paying a dividend. I think it was 3 years ago. So all our numbers at the moment show that we will still be paying dividends going forward.
So taking the current economic environment into consideration, is it advantageous to the company's acquisition strategy?
We've got 3 ways of growing this business. We've got organic growth, and through a structured finance business, we've got a lot of distribution opportunities, which we're just taking the time and onboarding them safely. And structured finance is a great product for us to grow through because it gives us a second layer of insulation against credit loss. So in this kind of environment, that's a good product for us. The second way of growing is through acquisition. We've got a handful of acquisitions which I would term as being green. They've got the characteristics of businesses that we would like. And I think our executive chairman, Jim Mellon's already spoken about that historically, that what we're keen on is gaining greater market share in sectors we're already in, and actually owning the customers. So that's really our strategy. And the sectors we are in, I think it's 15.7 billion is the opportunity, and our market share is less than 2%. So there's a great amount of headroom for us to grow. And the third opportunity, or the third way that we grow, is through backing management teams. We've got almost like an incubator kind of theory, and we've done this with various businesses in the past. We grew an FX business from zero. It makes £1 million a year for us, basically year in, year out. I met 2 great guys who wanted to start up a fermentation tank leasing business in the UK to craft breweries. I mean, it sounds incredibly niche. So we went from zero to being the biggest lessor of these vessels in the UK. I mean, it's a great business. The management team's really strong in there, but we started that from zero. But what those actually indicating, we've had another one, the British Lending Exchange, there in subprime lending. We've had no exposure to subprime lending. That's their bag. They know it really well. So they get on and do that. And so the likes of Ninkasi and the Business Lending Exchange, what we did there was we looked at it and said, well, look, this is day one. We're taking a risk greater than putting debt in the business. So we'd like some equity and options to acquire more equity. And in both of those cases, the management team that was starting the business were starting to grow and then sell. But as for us, we didn't want to sell it because if we're putting liquidity lines into these businesses for, I don't know, £7-8 million, the last thing I need personally as the CEO is to get them £7 or £8 million back. I'd rather it was lending, earning interest. So gaining access to ownership of these businesses is a really strong USP for us. So we actually treat that, it's almost like a private equity play with some debt put in there, whereas we provide both equity and debt.
You mentioned green earlier on. I'm just wondering how you are future-proofing the business in terms of tech. and climate change, because I can see that you'd spent millions on your IT investment program. I'm wondering if there's the alignment between that expenditure and investment and your ambitions to be green and standard bearers of climate change.
I mean, I think we're all fully aware there's a climate disaster basically on the horizon, and it would be foolish for any of us not to try and help. And anything we can do, we will. I mean, on the island, we're the primary funder to agriculture, fisheries, etc. And that's a space we're really comfortable in. So, I mean, we finance everything from livestock, fertilizer, seeds, second-hand cars, training courses, whatever, to deal with that whole sector. And in the UK, that's a great opportunity for us as well. There's not too many players in the UK in that sector, and I'm not trying to encourage other people to enter that sector, but I think it's actually one that has a great deal of longevity as well as serving your ESG. But for us, it's not about finding a sector and then being able to tick an ESG box. That should happen naturally for us. The opportunities that we're looking for will come that way, whether it's wind farms, solar panels, etc. But some of these deals, as you can imagine, a wind farm is a huge expenditure, and it would be too chunky for us to take onto our balance sheet. So we'd happily be involved as either the lead in a syndicate or part of a syndicate to fund those projects.
So you've mentioned we and the board. So how would you describe the makeup of the board and management? How diverse is the components that make up the board?
Well, we start at the beginning. The company split between male females 51 and 49%. My management team's 50-50. When we get to the board, we've got the crisis that you'd always have, and our NEDs actually reflect the demographic of the Isle of Man, and the number of female NEDs on the Isle of Man is incredibly thin. So we're actively having to make a positive discrimination to encourage that level of diversity. And if you look at diversity in terms of ethnic origin, then we have far greater diversity on that basis than what the Isle of Man census, for example, would suggest.
So
it's an evolution. I think it's like everything says, it's very much an evolution. You know what you want to get to, and you know how you're going to get there. It's just trying to shorten that time scale to get there. Because let's be honest, why has this business got a bald, middle-aged CEO that's white European? I mean, it's a caricature almost.
possibly because you were the best man for the job, and I'm quite sure that the board wouldn't have appointed you otherwise. So at a glance, what is it that Manx Financial Group offers everybody? So we've spoken about Conister Bank, but what else makes up your group?
I think what makes us different and what allows us to post stable earnings is with a diversified financial services group. And I always try and explain it. Son's a musician, so I try and explain it from his angle. Where you've got a recording board or a soundboard, you can't have all the faders up at 10. Some will be up, some will be down, some will be in the middle, and that's the beauty of our diversification. If you take the FX business that I mentioned earlier, it's thrived on market turmoil. Currencies fluctuate so much, so it makes a lot of money. We've got an IFA business. It hates turmoil, it loves stability. So the wealth management side, people are nervous about where to change their holdings or which holdings to go to. So that faders down at the moment. The FX business faders up. The lending on the Isle of Man, it's up. Then Cassie, people like that, British Lending Exchange, they're all at different stages between that 1 and 10 and that fader board. And I think it's that diversification that makes us different. And we've got a very focused strategy.
And focused is definitely good. Thank you very much indeed. Douglas Grant, Chief Executive Officer of Manx Financial Group. Thank you very much indeed.
Thank you. Nice to meet you.